Today, folks, we're going to dive into all the comments, the questions, the concerns, the interest going on in the realm of investing today in this fascinating kind of technological jump with AI, compute power, and just the insanity of what this means for impacts on your job, society. I'm very confident that, all human desire at some point in the next 100 years is likely to be met through technological advancements, and the likelihood of you going to get a real education in the next 4 years is mostly going to be obsolete for the vast majority of jobs. And we'll kick it off with those Q&A questions and talk about the broad view with especially all the stuff going on with Sam Altman and the recent releases of AI video. But a lot of people were contemplating, it's going to take 50 years to obsolete my job. And I honestly think if you're in, obviously, trades, construction, electrical work, your job's probably pretty secure. But this guy says most jobs will be obsolete in 9.5 years. I'm curious to where you come up with these numbers, because I honestly think a lot of jobs will start getting replaced probably in the next 1 to 3 years that are related to anything media related. So anything creative is starting to get simplified. That's all video, that's all artists. I mean, those jobs are going to be the first ones that get largely impacted. Anything analytical based, anything data based, like honestly, anything accounting, lawyers, you name it. If there's a data trove for it, unless it's something that's nuanced, it's going to be replaced by data. And I know people already not using lawyers and, using ChatGPT to get like summaries of things and then going on to Google to clarify and make sure they're correct before they'll go to a lawyer. I mean, there's so many jobs and I'm scared. I'm having an existential crisis, not as much for myself because, hey, I'm old. I've been around the block. I got a piece of real estate. We're saving. I still got a decent job. I got a second to realize what's up. But if you are like 18 or 19 right now, you have a whole more complicated world that you're going to be coming into. And education is the scariest discussion, because if you think you're going to go work for Disney as an editor, I'm getting really concerned that in that 4-year degree you're going to get, you most likely are going to be obsolete, baby. Glad to be here, and I'm glad to be here as well. Getting into it, taking a look at the Sam Altman details. I think this is the most fascinating first edge jump. These videos that have no audio, that are just basically word prompted. I mean, if you guys haven't seen these, you should scroll through his Twitter account, because this stuff is just wild. It's entertaining. I'm sure you've seen a bajillion videos, because this is all anyone's been talking about this week. And it is insane. I mean, just a word text prompt video that come into this level of quality. And what's the funniest comment that came out of this is, OpenAI was just that. It was open. It was free. Open source, that was what was so beautiful about it. Now it's the exact opposite. It's closed source. You got to pay a monthly fee to use it. It's large. And I love the saying too, like Google, and I know a lot of big companies, they're like, oh, AI, it's just going to help implement better work progress and better, output and efficiency. But really, they know if AI can do the job of 5 people with 1 person, you're going to lose your job. It's like you're looking at all these tech layoffs, and it has nothing to do with AI. You're looking at Bell that just laid off thousands of employees. Why? Because it's shareholder value. They do not care about you or your job. Do not get coddled over by the BS of what big business is telling you. The reality is hitting real hard here, and it's going to come like a bag of bricks. I am a janitor. My job is secure because people are generally lazy and no one wants to clean up after themselves. Yeah, I would still contemplate that, because I mean, there's robots you can look up on YouTube right now that go around and they're cleaning toilets and public bathrooms. I mean, I feel like those jobs, anything where you're a little bit more broad-based, right? Like as a janitor, I'm sure you're doing obviously a lot more than perhaps just wiping a floor, right? Like you're going to be fixing certain things. You're going to be doing more intricate things. It's kind of like, again, construction. It's kind of like electrical, like anything you got to go in, get ladders, things that get too technical for a robot outside of just cleaning a toilet. Like your job is probably pretty secure, right? And that's really what you got to consider if you're looking to get to a place of retirement. And God knows, even, as a janitor, a lot of the things you're doing will likely be replaced over the next 40 to 60 years. Over the lifespan of a career, right? 100% job security. Visited the SOAR webpage the other day and scary about the potential of AI vids. Forget about the potential of this. We at my job are already implementing ChatGPT with video, like the stuff I was showing on the last stream. There's so many editing softwares now that are just getting rid of people that needed to edit podcasts. That job's gone. You don't need an editor to edit a podcast anymore. You don't need an editor to crap out a basic video. You can use word text now. And it's synthesia. You don't even need to, I don't even need to be here. I can just get a fake person to speak in multiple languages. It's not perfect yet, but it is at a place now where it's usable, which is mind-boggling. I'm an accountant and I work at an auto dealer group. I can see like in 10 to 15 years, there will be some cuts, but I believe some jobs will still be intact. Anything that is, again, if your job is nuanced enough, where there's like integral parts of data that can't be replacing it, then you're good. But honestly, I'm already looking at accounting software where I can take, again, accounting is just going through your books on your bank, right? Like your credit card statements, your write-offs, especially if you're a business, and your income account. Yeah, you can just crap that into a program and it should just be able to crap up my income versus expenses, then categorize my expenses for me. I shouldn't need to pay an accountant to do that. I generally right now do it myself, but I'm literally looking at accounting software that'll do that. So what do you need an accountant for? Just to file. And that's literally pretty much all I pay my accountant to do, because I do all the work up front. I pay her to file, so she's pretty cheap, and she'll give me advice. She lets me know things when I have a lot of questions, because corporate accounting gets fairly messy. Would you consider adding SMH? Honestly, I wish I just kept like my Taiwan Semiconductor stock earlier on. Kind of got petrified, weak hands, didn't diamond handhold that. I would have been much better off. The problem that I have with the semiconductor ETF is when I always come down to like secular ETFs, I always have a problem with how concentrated they are, which scares the crap out of me, because it's like, hey, I can just buy the S&P 500 and I'm going to get the best chip companies. I'm going to get the companies leading in AI. And honestly, if I'm buying individual stocks at this point in the game, I'm scared. I know a lot of people trust these wicked rallies, but I don't know how long this lasts for. And when you're just selling the tools to the people utilizing AI, I'd rather use the guy that has the control over the software. Because Microsoft's ChatGPT is a useful tool. People are going to subscribe to that crap for a long time. And as the tools get better, they're going to subscribe and pay more money for that stuff, because the efficiency, right? If it's going to replace 5 jobs, I don't mind paying $20 or $30 a month for it. So that's kind of where we're at. So I'd rather own the guys that are going to be utilizing the end result of these chips than own the chips, because I'm really worried that chip efficiency is going to continue to change. You got Amazon and companies working on their own chips and diamond chips and new versions of things all the time. And it's just not an industry I understand. And when 25% of this portfolio in SMH pretty much just sits in NVIDIA, I'd rather just buy the S&P 500. I get good NVIDIA exposure in there. And hey, if it continues to take off, I'm not really as worried about it. But if NVIDIA and the chip sector start to crash or shift in a material way, I mean, you're going to see a real big impact, especially when 1/4 of your entire investment is in one single stock. And I mean, they kind of missed super microcomputer too, right? I mean, they're not even holding that in SMH. And this thing just went absolutely just damn parabolic. And now analysts are saying, this is when I know things get sketchy, when analysts are like, oh, it's going to be $1,000 stock, 1,200 price target. As soon as I see analysts getting overly bullish on companies, like, again, these parabolic movements are signs of a bubble. You know, I keep arguing with people about this and they don't believe me. I like this comment here. What AI bubble? Nancy Pelosi still holds NVIDIA stock, so we are all safe. When she starts dumping NVIDIA shares, then it will get time to panic. So the concern with NVIDIA is the same thing with like Tesla and these other companies, is they go on these parabolic runs because of their earnings, and their earnings are justifying the parabolic run. But it becomes increasingly hard to keep up that pace of growth at the scale that NVIDIA currently has. And I'm not saying it can't. It will for a while, right? Like, I mean, it passed Google's valuation here, and it's not making nearly the same money yet. We'll see what this next earnings, and I think the earnings for this is next week, are they not? We'll have to take a look. But I mean, you look at this, right? Like, it's trading at 100 times multiple, basically. So, I mean, even if it doubles up its revenue, you're still sitting at a 50 times multiple, right? And then if it doubles it doesn't need to double it up just from that first double. I mean, then you're kind of getting into the realm of the 25 PE, but that means I think it should be doing around 19 or 20 billion in net income consistently, and it needs to sustain that moving forward and grow from there. And when your only buyers are big businesses like Meta and Amazon, like, it's not retail that's growing NVIDIA, it's people purchasing $50,000 H100s and H200s, right? So I don't know. I'm just an idiot. I honestly have no idea, but I do know the value is extremely high, and it is impossible. It is humanly impossible and has never been achieved in the history of the stock market to trade at this kind of a multiple and this kind of a growth rate for a continual pace of time. It's usually a short-lived event. And honestly, when the growth rate starts slowing down, and it could stay high, but it's going to slow down, you can't justify 100 times multiple. So these stocks are going to make a lot of people money, and like the crypto boom and bust, because again, like, it just comes back to crypto. NFTs are still useful, folks. Smart contracts and all that stuff, and they're still worthless, which doesn't make sense because businesses haven't started implementing them at scale. And same with AI. Like, AI hasn't been implemented at scale. I mean, it really is just the infancy days. So I don't know. I'm really curious to see what happens here. It's going to be a case study for sure. The internet has pretty universally called his Steve Ballmer iPhone moment. And this is where we're going to shift into this fun conversation of, Mark Zuckerberg just kind of crapping on the next stage of, when it comes to the VR headsets, especially with Vision Pro and Apple. And this hits close to home for me personally. People are saying, I think it was a bad idea for him to post this. It makes him seem kind of scared of Apple and unprofessional. And I love my Quest, but I think it's just a bad look. I don't know. Obviously, this was a huge conversation this week too with Mark Zuckerberg.
I have to say that before this,
I'm sure you guys seen it.
Expected that Quest would be the better value for most people since it's really good and it's like 7 times less expensive. But after using it, I don't just think that Quest is better value. I think the Quest is better product, period.
See, the people were really upset because they're comparing it to the early, when the end of basically, BlackBerry, when iPhone dropped in 2007. And I like I said, I might be one-sided with this conversation because I used the Oculus when it was in its infancy stages. Like, I had the privilege of somebody that bought the Oculus, set all the cameras up on the corners of the room. And I remember putting it on for the first time, and you're standing in the middle of a street in this very like N64 day styled graphics. And you turn around, and when you turn back, there's a car on fire and barrels on fire. And then you turn the other way and you're sitting at a desk, and you're looking around at this desk, and you look over, and then all of a sudden the transition of you looking over, you're in space. And that was like my first introduction and my love with VR. And the fact that Meta purchased that and has taken it to the level that it is today and is the premier, I think, in apps and just general use cases for VR. I obviously, I'm kind of one-sided with Meta here, that I think this is still the superior product to Apple. I think Apple's done a few things incredibly well, but in the spectrum of the ecosystem, they don't have anything yet. And I feel like Apple is being late to a lot of the games in many aspects because, when they launched the iPhone, like, they just started getting into more advanced data with AT&T, which is a partnership that BlackBerry just didn't have. It was a whole new wave toward data advancements beyond just the basic pings that you could do with text. So I think like they had a moat. They had something that BlackBerry was late to the game on and allowed them to crush and build an entire ecosystem. That is what Meta has done with this. They came in super early. They built out an entire ecosystem, and now Apple wants a piece of it, but they're not playing in the realm of that ecosystem. So I'm curious to how Apple's going to build it out. They're not partnered with Xbox. They're not making it so you can play games on it. I mean, I'm just shocked by the infancy of the product. And it really bothered me when people like Casey Neistat and these big YouTubers were like, oh, the Quest is just a toy. Like, what Apple has here is a game changer. But I'm like, then are you going to use it every day? I'm using this thing 4 or 5 days a week for the last 2 years. This has replaced all my game station, everything. Like, I am obsessed with this thing on a realistic level, but I think people get hyped into it like they did with the Quest or the Pro version of this, but no one's using this for work. I mean, when you start using it 4 days a week and tell me you're using it that much and you have a use case that makes sense, then yeah, I'll be like, okay, Apple has a moat. But until people start adopting it in a real manner, that's not just for, novelty's sake, because no one's really watching movies in VR. I'm sorry. I don't know anybody. I don't talk to anyone that uses Quest. It's like, oh, I'm sitting down to watch my Netflix show tonight. Nobody is saying that. What people are doing is games, chat groups, poker, you name it. If it's something entertaining, even on the spectrum of adult entertainment, that's what they're using it for. And I've seen a lot of jokes that, with the graphics on that Apple Vision Pro, but the brand loyalty is strong with Apple. And I agree. I'm not saying that Apple can't crush it. I could be wrong. It's all speculative in nature. I'm always going to be stuck on the side of Meta with this, just because I've been with them since day one. I've been with them since they got bought out. I've been with them through the first Quest to the third one here. This, when we kind of just get more and more advanced. I don't know. I love it. I've been around this for a while, and it has a special place in my soul. There was one point no one was watching videos on an iPhone. Yeah, I know. The first iPhone that came out in 2007, like it had the capability for data, but there was no app store. There was just basic things you couldn't really delete or move. I mean, it was pretty prehistoric, but the basic function and the basic form factor is exactly the same. It's almost the same. There's the crappier camera, smaller form factor. Like, it was such a similar thing. It really hasn't changed too much. It's kind of interesting. It just the obviously the intensity of chip manufacturing and camera and all that stuff's evolved. But moving on, Warren Buffett calls an index fund a protection against ignorance. You're going to have to, am I sharing this? Let me make sure you guys can see this. I always end up just reading comments without getting into it. They can't do any wrong. We'll find out. We'll find out. There was one point nobody was, yeah, I mean, it's funny, but this comment's pretty good. I like this comment. Warren Buffett called index funds a protection against ignorance. Keep in mind, a lot of crap Warren Buffett said 20 years ago is almost irrelevant today. I always hear Warren Buffett quotes in a lot of books that he read, and they're so irrelevant to the way he used to invest. Keep that in mind. If you're going to have 95% of your money in that sort of a thing, you may just go all in and call it a day. If you know what you're doing, you should have most of your money in about 8 to 12 stocks. Just look at the portfolios of all the biggest investors out there. If you don't know what you're doing, you probably shouldn't be making YouTube videos telling people what's going on. So I love this conversation because in the scale of my portfolio, which obviously this scale is perspective. There's people with $1 billion portfolios, $10 million portfolios, $100 portfolios. I'm kind of smushed in between here, getting pretty close to $1 million between me and the wife. And I'm just not in a place where I would be comfortable putting all of our money in 8 to 12 stocks. I think I can get exceptional rates of return by putting the vast majority of our money, like 80% of our money, in ETFs and index funds, and then put about 20 to maybe 25% in individual stocks, concentrate those individual stocks, don't over diversify them. And if we pick the right stocks, they outperform. But the problem is over a 20-year period, when you look at the difficulty that Warren Buffett has picking stocks today, there's a good reason for it, because these industries are ebb and flow today. They change so rapidly and it's hard to tell, right? But the best trade of the last 10 years has just by the top S&P tech companies. The top S&P tech companies have led to the most absurd returns that we've ever seen in history. And if that holds true for the next decade, that's kind of what we're leaning into, right? Is let's just buy the big tech companies we believe in that are forefronting AI. We'll concentrate them the most and we'll sit back and see what happens. But I think it's more devilish to say that people that have managed large amounts of wealth, like the likes of Ray Dalio, are putting most of their money in individual stocks. Because, I mean, Ray Dalio's got a lot of money in broad-based ETFs, S&P 500-like ETFs, emerging market ETFs, and then he owns things like Procter & Gamble, Coca-Cola. He's not concentrating most of his wealth like Warren Buffett into one stock like Apple. Now, he's still seeing great performance, but I mean, you look at the selection and the diversity in a portfolio like this, and this is what managing wealth looks like at scale. When you get into managing billions of dollars worth of wealth, this is what it looks like. This is what Bill Gates' portfolio looks like. Outside of Warren Buffett, and Warren Buffett today, I think you really need to recognize, wants to put all of his money in the S&P. He says that over and over and over again, because the S&P is it's such a beautiful system of market cap weighted, passively managed, stocks that are systematically weighted on market cap. So, I mean, I think it's an arrogant thing to say that you could just buy 8 or 12 stocks and not absolutely decimate yourself. Because if you go back to 2020 and you told people to buy 8 to 12 stocks and they held on to those and they thought they were a genius and they felt like a genius because they picked GameStop at the bottom, we're sorely, woken up to reality when, I mean, go into the venture capital markets. You want to talk about devastation. I'm like, 8 to 12 stocks is not necessarily enough diversity if you are truly an idiot in what you're picking. And 8 to 12 stocks, you could also state, are over diversified, because people like Elon Musk, if you want to be a billionaire, just put all his money into one or two things. I think if you know what you're doing and you want to be rich, you're not going to get rich in the stock market. And I think they get kind of glazed over that the stock market is like this tool to make money daily. And it's not. It's a very challenging set to look at making money short-term in the stock market. If you want to become a billionaire and you want to become uber rich, you need to go start a business. That's the only way to do it, because trying to get consistently like a 20 or 30% compounded rate of return is almost impossible over a 30-year period. Even Buffett isn't compounding his portfolio at this scale at the rates that he was. I mean, the S&P has been so consistent and so reliable. That's why 95+% of people fail over a 10-year period. And there was one guy that bet Buffett, like Warren Buffett said, like, I'll bet you $1 million that over a 10-year period, you can't outperform the S&P 500. There was one hedge fund that bet him. And I think within the first 6 years of that bet, they called it off and they said, no, we're not doing this anymore, because they were failing miserably. It is just so hard to outperform for very long periods of time. I've almost got a decade under my belt. I am a year and a half out now from having a decade of outsized returns. And if I don't screw it up, I can officially say, hey, for 10 years, I think I've had about I'd have to do the math, but I think it's somewhere closer to like an 18-20% rate of compounded return year over year, which is just insane, right? But it's through a lot of luck. We've had a decade of one of the best markets ever in history. There's no reason that's going to be guaranteed. Like, I'm not a genius because I bought Apple, the largest company on the S&P 500. I'm not a genius because I realized they were going to legalize the MJ products and I bought the largest MJ company. Like, I feel like I made a lot of money just from stupid luck in a good market environment. But if it was any other market environment, I'd have got wrecked. And the dot-com bubble is a good example of that for tech, right? I don't know if we're there, but some stocks are skyrocketing. Google not so much, which is why I love Google, because I think it's undervalued. Tesla recovered some of its previous losses. The auto margins are thin and will likely remain thin with increased competition from BYD. Tesla's market cap depends on unfinished software that will require government approval, and that's speculative. So I think Tesla's market cap today is largely represented by a very diverse car company. I think it's one of these things where I get that it's hyper speculative on self-driving and robotics and all this stuff, which is why I'm buying it. But I think the entire market cap is sustaining. And I think it's going to bleed off as earnings probably continue to blackluster this year. That's what I'm hoping. Like Google, right? Like, I feel like you're crapping on these two companies because they're getting beat up, but that's personally why I like them so much, is because they're getting beaten to the ground. And I just think that if you step maybe 10, 20 years into the future, if I'm right, and Tesla has a brand like Apple did in the early day, and it's built out this new realm of a younger audience, all these kids that are like, 10 to 15 right now that are obsessing over cars. You listen to how kids talk about Teslas and they're cool. People talk about these things like they're super cool and super innovative. And it's just, that branding power sticks. It's like Nike. So I'm just on the presumption that even if Tesla takes 30% of the auto market at some point in the next 20 to 30 years, I mean, that plus you got all the entire power walls, which they just updated their power walls. I mean, you keep forgetting that Tesla is a much more broader company than just a car company, even without self-driving, even without robotics. You got the entire charging network that even, the likes of Shell are partnering with, Ford, all the major auto companies. You've got these power walls and these solar panels that are getting ever more advanced. I just feel like those industries would be enough to justify the market cap once we get to scale, right? Which we're not there yet. So it's overvalued. It is an overvalued stock that does not deserve to be trading at a 50 times multiple. That's why I'm buying it, because it's crashing. Like, that's the point of buying companies to get rich, is when they're getting beat up and people don't believe in them anymore. But there's a spark of truth behind all of it. Self-driving is amazing. This shit is around the corner. It might not be here tomorrow, but guess what? I can sit on it for the next 5 or 10 years. I don't need it to happen tomorrow. I don't want it to happen tomorrow, because this is how you get rich, by taking a 1-2 year leave of accumulating stocks that have real potential that people think are trash, because usually somewhere in between is the value, right? So I'm hoping that Tesla drops down between 100 and 150 a share. It probably won't get there, but hey, I'm going to be buying it all the way down, and we'll see what happens earnings after earnings this year, because I think 2025, 2026, they'll have a bit of a turnaround. Google, I think, has some of the most advanced AI on the planet today, and everybody's shitting on them because everyone's only paying attention to ChatGPT and what Sora and all these things with Sam Altman are doing. People think like Microsoft is this leader in AI because they purchased OpenAI, right? Like, they keep forgetting that Google actually has a much better system, in my opinion, than ChatGPT. I think Google is going to be, and they have more data. I mean, you look at YouTube. I don't think people actually read the terms of service when they're uploading stuff to YouTube. Like, you realize that you're giving all that data, billions. I mean, do you know how many videos are uploaded to Google a day? Or how many hours? Let's just Google. This is going to be wild. Like, I mean, how many hours of video uploaded to YouTube a day? These numbers are insane, right? 720,000 hours. There are 500 hours of video uploaded every minute. So it would take you close to 82 years to watch all the videos that are being uploaded every friggin' day. And Google owns all of that data. I mean, you technically own the content and you can delete it, but the fact is, if you read the terms of service, Google has the right to that content. You're basically just giving it to them. Google has more data and search history than Microsoft could ever get their hands on. And you know what that means for AI algos? I mean, like, come on. It's insane. So I just don't understand why Microsoft can trade at a high multiple and Google just gets crapped on when they have they got great margins. YouTube is a better streaming service than any platform that exists. I love it. So crash it, take it down. Let's get Google back into a 19 times multiple. I love when people are just shitting on companies. It's just great. It's just great. So take advantage of it while you can. If you had to pick between Apple, Amazon, and Microsoft to be in your portfolio next, which one would you pick? Honestly, this is a super hard question because I am such at a different phase of my investing career. And I wouldn't tell you to invest in any of these on any opinion that I have in this moment. But if I had to pick one out of just pure stability and understanding, it'd probably be Amazon for the short term. If I had to just gamble on one for the short term, because I just know e-commerce has been growing so well in this shitty environment. Whereas like Microsoft's picking up steam, but it's super expensive. I just feel like Amazon has a lot of things they can play around with. And there's a lot more growth in e-commerce still than there has been in like Google and Meta. And Meta, I feel like a lot of these other companies have had to manipulate a lot of their books and a lot of their employees and a lot of things to get their balance sheets to where they are right now. Whereas Amazon, man, like e-commerce, I mean, what is Amazon's? I mean, you look at Amazon's revenue growth, right? Like Amazon revenue, and it's beautiful. Like it's never dipped into the negatives, right? I mean, they've had consistent revenue growth, and even in this shit, this is what a recession looks like right here. This is what the soft landing looks like. Like their revenue growth went from like 30 to 40% down to 7%, back up into like the double digits. But you have to understand, Amazon is doing $500+ billion. Like it's insane. It's so dumb how much money that like transactions are going on in the ecosystem of Amazon. So I'm just gambling. I don't believe that though. We own a little bit of Amazon, and we honestly, it's like one of the smallest positions in our portfolio. But I love e-commerce right now. Even though I'm not buying Shopify, I'm not buying Amazon. I just recognize that this is one of the few industries that is still in an infancy stage where a lot of people are going from brick and mortar into e-commerce. So I think it's an easier space to understand than AI. I think it's just, but honestly, I'm more of a software guy. So that's why I buy things like Google and Meta, and we're buying things like, Microsoft. And because you can see that anything that has like physical hardware, like Tesla, that's very expensive. And you look at Apple, like those companies get hindered in markets like this, where software companies continue to excel. I had a hard undervalued stock. Yeah. So this is a tough one here. Maybe BABA, but I just don't trust China. So you look at somebody like Michael Burry, from The Big Short, and he's been buying in and out of BABA and JD.com or all these Chinese stocks literally for the last 3 years. He just bought back Alibaba, but I have a hard time with companies where I understand the perspective is broken, because unfortunately perspective is reality. And like that comment about Tesla is like, people just shit on companies, and once the perspective shifts and people think the future growth is kind of gone, that's when the companies start to deteriorate, right? But the difference is a lot of US companies, they don't have that as staying power, because eventually they'll have one good quarter where all of a sudden they'll release a new product, something else will come down the wire, self-driving is finally like there, or some big news will hit and the entire perception of the company will shift. Just like my background. People don't even know this is happening. Humanoid robots has not been recognized by the broader market yet. This is going to be $1 trillion industry. This is not being recognized at all. Well, maybe I guess I could be wrong, because Symbotic and some of these other companies are rallying off these robotics, but I still think people aren't appreciating the scope of stuff like this. Whereas Alibaba, right, is such a horrified perceived company. Like people are petrified of China right now. And until that petrification changes in the Western world, where most capital and investment capital is coming from, I mean, even people in China don't want to invest in China right now. So I get that it's cheap, but man, I can show you companies that like have been cheap for a long time. I mean, you look at this company, it hasn't done anything over, I mean, could you imagine buying Alibaba in 2014 and still holding it today, not getting any dividends, not getting any capital appreciation? And you could have just bought the S&P 500, or you could have bought just a broad market ETF, and you would have done so much better. Like it just shows you the destructive power of perception, because Alibaba is an amazing company. Alibaba does, I think, what is it like? It's like 3 times the amount of product shipment than Amazon does. Alibaba, by all metric at its core business, is bigger than Amazon. It's just not appreciated. And it has to be appreciated in order for the stock to rally, unfortunately, because earnings doesn't always mean stocks go up. Unfortunately, perception is one of the biggest key drivers to growth in companies. And that's why we're seeing like AI stocks explode, right? Because the perception is shifting so dramatically, which tends to lead to a bubble. This is the exact opposite. So who knows? Maybe it'll come back. Like I said, I think Google will always have a good perception, and unless something dramatic, really bad. I don't know. Things can change at a drop of a dime. You have to be very cognizant of stocks that you hold, but I feel bad for BABA, man. Don't follow Burry. I agree. I think Burry's had a great run. He still continued to outperform the market, but I think he is one of the worst investors ever. I think he has called a market crash every year. Probably every other year, he thinks the market's going to crash. He tries shorting stocks that are incredibly volatile. Like he shorted Tesla stock, which was dumb. If he held it, he would have done fine. But you don't short volatile stocks. Anybody that shorted Nvidia was an idiot. I mean, because you just don't know. And the problem is when you don't know what's happening, you're an idiot when you publicly say, "Hey, I'm going to short these companies," or "Hey, like I'm going to buy Chinese stocks." Like they're just, and especially with how much Burry trades, he's a trader. He's not an investor. And I think you have to recognize that if you're trading in a 1 to 3 year period, that you are generally a trader and a swing trader. And that's how I made most of my money, was through swing trading companies in short periods of time. Anything, in my opinion, 1 to 3 years is a short period of time. If you're holding it for 10 years, 5-10 years, you're an investor. Because that's Warren Buffett. Warren Buffett's an investor. He wants to buy it and hold it for the rest of his life. And you want to perpetuate the long-term value of the company over the entirety of its earnings, of its lifespan. That's what investing is like. Trading is, well, how can I make the most money in the short term and outperform the market? So you got to be a little careful with what Burry's doing, because I just think he's a horrible investor for most people to follow. A real company doesn't exist in China. Government will always take it. Yeah, but I mean, I don't believe that per se. I mean, it's hard, right? Like I feel like China's policies do dictate a lot of how companies function to some extent, but that's the same in every country. I mean, you look at Canada. Canada just implemented new laws on the financial institutions that are going to lead them to making less revenue. There's nothing saying that like the US couldn't step into Microsoft and say, "Hey, you're a monopoly," which they are. Nobody wants to accept that Amazon and Microsoft are monopolies today. They are becoming ever more bigger conglomerates. And one day the government might say, "Hey, that's enough." And they're going to step in and they're going to make the company sever its AI stuff and sever, Xbox and the gaming or whatever. And then people will be like, it's like China, like all of a sudden the government's taking control. Like at some level or another, government always has control over big companies. So it's just a matter of how do you not piss the big companies up enough that they leave. Now, I think in the US, it's easier for companies like Amazon to go work in Sweden or, God knows, some offshore whatever accounts, and they just move their corporations to another country. But I think for China, that's not as easy. I think that might be one of the deterrents, is China like owns the companies a little bit more. Because I think isn't that China's like goal? Weren't they like basically saying that we need ownership in all the major companies, whereas like the government in the US and Canada don't have ownership to some major extent? If Bill Gates dies, would Microsoft stock plummet? Probably not. Bill Gates has no control. Well, if they liquidate, I mean, how many shares? What percentage of shares does Bill Gates own? Because if his kids liquidate it, yeah, I mean, it's a huge contributing factor to like stocks plummeting if people die. So apparently Bill Gates owns more than 1% of Microsoft shares, worth around $20 billion. So, okay, like nothing impactful. I mean, Bill Gates has $20 billion worth of Microsoft stock. You're talking about a company today that's worth $3 trillion. 20 billion isn't even a drop. Like it probably wouldn't even move the stock $5. Like, it's not going to be anything impactful. If it's too good, I agree. Bill Gates is pure evil. Especially with that Epstein list coming out. I don't know. I'm starting to think a lot of people are pure evil these days. Why buy Chinese companies when there are plenty of good companies in the US? Because the problem is companies in the US are too expensive, right? Like they're very, very expensive. When you can buy a company like Alibaba over something like Amazon, I honestly, if you didn't tell me anything about the countries or what was going on geopolitically, and you just said, here's two companies' balance sheets, what one would you pick? I would pick Baba every day, probably over every major tech company in the US. Baba has such an ecosystem of social media and the biggest e-commerce company on the planet by volume. Like Baba is just a behemoth, right? But look at Charlie Munger. Charlie Munger said it was his biggest mistake purchasing Alibaba because it was more of an e-commerce and like just a product. I don't know. It's a tough decision, right? Because if you are a value investor, value is in China. Value is in broken markets that are likely to recover at some point in the future. Just Stephen Hawking. That's what I was relating to. But, Stephen Hawking is a weird guy, man. He had 2 wives after he was fully crippled. Like, and the whole Epstein Island thing, it's a little bit weird listening to Stacey. I still think buying NVIDIA ahead of earnings, especially to Stacey or as can CNBC, 100% gambling. But I might buy some to surf that wave and then get off. Yeah, honestly, if earnings have anything to say about it this time around, like I said, if I had to speculate, and I'm probably wrong because I'm always wrong. There's my one rule of thumb is I don't buy stocks the week of earnings. That's why I loaded up on Google like well before earnings, because I just don't trust what happens, because sometimes stocks get overbought into earnings, and even though the valuations and the numbers come in great, the stock will still plummet. So like Nvidia's been pumped so damn hard that like those numbers are probably priced in, and it's likely you're going to see a relief sell off at some point rather than a relief rally, because people are just going to take profit, right? They're going to recognize that there's so much of this is priced in and the stock will just go down. And it could drop 20% for God knows whatever reason. It's just gambling, right? But long term, again, I think NVIDIA is gambling long term too. I just don't see this. I don't understand it. I just don't. I feel like the chip industry has changed so rapidly that like short term, it's better to swing trade or hold it for a year and get out than hold it for the next decade. Because there's just going to be another advancement in chips. And if you look at what's going on in the chip industry beyond what currently exists, there's a lot of stuff that is just in the back cave right now being worked on. And I mean, even look at like Apple when they released the M1 chip, like that was such a revolutionary jump. It's just that NVIDIA owns the chips that are best for processing data in the way that like the AI compute power is working. Because it's just like you're not going to use an H100 to mine crypto, right? Like crypto mining needs a certain GPU, CPU. You get into these different things that do jobs differently. And right now, NVIDIA just has the best chip for that job of AI algorithms. And they've captured the attention of big business. That will change at some point. Joe Rogan was saying that Stephen Hawking loves stream wars. Yeah. Oh God, where are we going? I think what NVIDIA puts out for expectations will play the biggest part. If they cut under analyst predictions, a lot of money will be flowing around out of it. Yeah, we'll see. That's right. Almost bought Google before earnings. Glad I didn't. Yeah, because it's tanking, right? I mean, Google's only back down to where my buy price was. I mean, I'm pretty much flat on my Google shares, and I want it to go lower. I like buying these companies. That's why I try to start with an initial lump sum investment, and then I just wait. I try and buy a few thousand worth. My goal is usually to get about $10,000 to $20,000 worth of a stock, and then depending on what happens, maybe I buy more, maybe I don't. But anyways, moving on. I've held Manulife. Manulife was another big Canadian stock story today that I thought was pretty interesting all in all. But let me get rid of that. So he's saying, I've held Manulife for like 9 years and it has done nothing until this past month. MSC to the moon. So for some reason, the insurance space in Canada has recently exploded. If you looked at the insurance space, I don't know what happened, but for the first time in like ever, I mean, you could have said that basically since 2015 or 2015 peak, the stock didn't do anything. It remained flat. And then out of nowhere, it's just recently blowing up like a massive amount. And for, a dividend stock, this is a big amount, like 14% just in a month here is pretty astounding from the lows. I mean, you're up 40% almost, but I wouldn't be buying Manulife. This is what you got to really separate growth from income. Companies that pay income do not grow hardly at all. They just don't. When you're paying out a 5% dividend yield, the likelihood of you getting growth on top of that is a rarity. So you got to understand that like you're buying it for dividend compounded snowball growth. This is like retirement kind of stocks. Like if you bought in Manulife 10 years ago, the stock did nothing, but your dividend went from 13 cents a share to 40 cents. Like, I mean, you've 3.5x, 3x your dividend in 10 years. I mean, your cash flow and your yield on cost is probably pretty nice. I mean, that's the beauty of these great dividend companies, right? So you got to be really cognizant of what you're buying. So Shopify has questionable management. This is funny. This is kind of in relation to the same video because I talked about Shopify and they reneged. I don't even know what that word is. Signed severance packages or reneged and signed severance packages. Their president, Harley Fickelstein, is one shyster, often dumps a boatload of shares. His dad was charged with extortion of elderly family member and more charismatic, hyper-used skateboard salesman than someone you can trust. Shop will follow Nortel. This guy is really bearish on Shopify, which is interesting because he says, nice that you're talking about MFC, super value. So the guy craps on Shopify and is like, I like MFC though. Shopify, and back in the e-commerce conversation, is like, I can't buy this company because I think Canadian tech companies are bubbles. I mean, you look at all the US tech companies, they recovered and they're trading at price to earnings that are favorable. They're expensive, but favorable, right? Like, Google trading at a 25 PE, it's expensive, but it's nothing like Shopify. I mean, Shopify trades at 100 times PE, whatever, based on like the last earnings. But I mean, this is why it popped so aggressively. And this is my biggest fear with Canadian companies like Constellation Software, right? I do not understand this company enough to want to buy it. Same with like Palantir. They're just software companies that I'll never be able to understand because their diversification and their suite of software is just, it's not moated. It's always ever changing and it's very confusing. But you look at this, like how does Constellation Software trade at 111 times multiple? That's more than NVIDIA, right? Like, I mean, or it's close to the same value as NVIDIA. yet it doesn't grow at the same pace as Nvidia. Like its revenue growth is 23% for the last quarter. Yet Nvidia is growing at like a 50, 100 times revenue. Like its revenue quarter over quarter is insane. So how does this company justify 111 times growing revenue only at a 20% clip? I just don't get it at all. It's such a, it scares the crap out of me, and I would just avoid these. For me, not for you. Maybe you like it. It's your personal preference. I love how bullish you are, Kyle. I wish I could buy more, but I'm already tapped out. Not complaining though, since I bought near lows. I will always be more bullish than bearish, because every time the market is tanked, whether it was the 2020 market crash, whether it was the last dip in October, you've seen me go balls to the wall every time the market goes down. Why? Because that's how you get rich. It's like bulls always get rich and bears always eventually get sent to slaughter. It's just the way the market works. Statistically, so long as you're buying US companies and not Chinese markets and broader based market companies. But I don't know. The long term, you always get rich, man. If you buy great companies over a long period of time, I hate how bearish people get when the market gets negative. It's so dumb. Do Canadian tax loophole videos. That's the next video. Oh God, that's a complicated video, man. The Canadian tax loopholes with corporations. It's a beautiful thing. I'd buy Shopify October before Black Friday, Boxing Day. It always goes to the roof after those times. Yeah, I agree. It was a good buy when it sold off, but now it's too expensive. That's why I don't understand. Like when I listen to people like Jeremy from Financial Education and these people, like, it's just, I can understand why Tesla's expensive. I can't understand why Shopify is expensive. I'm looking at the future and I'm trying to grasp it, and I see what management's doing and I see how they're marketing and I see their growth rates. I've used Shopify. I get it. But it's replicatable. You have Square, you have competition. You don't have a moat. You don't have something that's not replicatable. Most of your growth is coming from services beyond the core aspect of your business. Amazon has a moat because of the warehousing and shipping. Shopify is just an online software that is replicatable. Their services are replicatable. It's like PayPal. Like, why are people so bullish on PayPal? I get it. It's cheap. I get it. But PayPal, if it disappeared tomorrow, it's not going to significantly change your life. Tesla has a moat. Tesla has a god dang awful balance sheet. Like, it's a beautifully, saying awful in a good way. And they have this great technical future outlook, and they're leading in EVs, and no one can catch up. Everybody is struggling so desperately. You just see how Tesla's they just got a stranglehold on an industry where everyone's like, they're failing miserably. Oh God, BYD is coming for their lunch. It's like, okay, so BYD becomes one of the top biggest auto companies next to Tesla. Still, like, you know what it's going to be like? The EV industry is going to be like every other industry. There's only going to be 3 major companies. Just like Apple, you have Samsung. Like, you have Huawei. Like, just like every industry, like software, like there's only going to be a few software companies. There's only going to be a few major companies in every industry. The world is moving into a monopolistic behavior. And if that holds true, the same is going to be the auto industry. There's going to be 3 or 4 major companies. That's it. And if you're one of those 3, guess what? You're going to own major market share. And it's going to be insane. Good old Kyle, watch. I'm going to get out of here too, but it's getting too late. I'm rambling, but I appreciate you guys stopping in for my rambling of a madman. And I'm going to do more videos on my existential crisis of the jobs market. And I want to do videos on how you can maybe navigate that and offer some advice, because I just feel so bad for young people. I feel so scared for young people. I feel like people are going to get ripped by the government. They're going to go and get an education because their parents want them to. They're going to come out thinking they're an incredible lawyer, an accountant. They're going to think they're just they're just going to think they have this future, and they won't. They won't. The future of abundance is about to happen in the next 50 years. And it's going to change the entire fundamentals of capitalism. It's going to change human philosophy. It's going to change religion. And I just don't think people are grasping the new world that is about to happen if we can live long enough. And when I mean live long enough, I mean like 50, 100 years max. In 50 or 100 years, robots are going to be making our food. Entertainment is going to be generated by AI. There is going to be no reason for humans to do just about anything, and it's going to be debilitating. I don't know if it's going to be depressing. I don't know how society functions in that world. It's such a fun debate because it is such a reality that we're headed toward, and it is so obvious it's happening. And I just like, think about it. Capitalism in its entirety fulfills human desire. Humans want to provide to their community. They want to provide to their family. They want to build and make like people that built roads, people that just do things that provide, and you get an impact of fulfillment. If you have no reason to do anything anymore, then where does fulfillment come from? What does the world look like? I'm telling you, man, that there's going to be, if you're in anywhere from being a kid to 30 right now, and you have like a good another 30 to 50 years ahead of you, I'm promising you, you're about to see some shit unfold that is going to change the entire dynamic of society in a way that profoundly has never even been thought of. Like, I mean, Egypt was around for 1,000 years. I mean, Cleopatra's era in Egypt is closer to our era of the iPhone than she was to the birth of the pyramids. Like, do you know how insane and how consistent society was for such a long period of time? Things just, they evolved. I mean, they had great innovations. I mean, like I don't want to get into history lessons. I'm just saying, like, you look at history and the evolvements, and I'm always curious to like, what was that one thing that started all of this? Was it electricity? Was the invention of electricity what started this entire thing that has happened in the last 100 years? Airplanes, going to space. Like, this has happened in 100 years, people. Go back to the 1800s and tell them this shit would happen, and they wouldn't believe you. And it only took 100 years. It's barely been a glimpse of like human evolution. What the hell's happening? What caused this? I mean, what if you went back in time? What's one thing that you could do that would cause all of this? It's just wild. Well, I have lunch with robots at my office. If you go to, there's a lot of restaurants right now where they're having robots come out and serve. I mean, we went to a sushi place. Your sushi comes out on a little robot. Slave to the destroyer, oh world. I need good Darth pennies. Anyways, I'm going to stop being so philosophical, but I'm just saying, if you look at what's happening, you can't help but have an existential crisis and a philosophical collapse of like humanity. It's going to be wild. Stay cool, stay awesome, folks. Let's not be too pessimistic.